In this video, we'll be talking about why your 401k is a bad investment, or just total garbage. Hey, what's up? I'm Marc Terribilini, and I'm all about achieving financial independence through real estate investing and online business. So if you're new to the channel and you're interested in financial independence for yourself, be sure to like and subscribe and you will not miss a thing. So if you've worked in corporate America for any period of time, you've heard of the 401k. It is the epitome of the best investment for the average person. Now, in this video, I kind of talk about some of the positives that they try and sell on you, but mostly the negatives and why I personally stopped contributing about 5 years ago. So to give a little history here, they used to have pensions. And what that was is you would work for a company for a number of years, you would reach retirement, and you would continue to get paid in your retirement years until you reached your final days. So you didn't really have to worry about investing and stuff like that because the company you worked for would cover your retirement. Now, that is a huge unknown for companies and somewhat of a burden because there's fluctuations in the market, sales could dip, there could be an issue with the company, lots of unknowns, and having to pay all those retirees through those periods is going to be very difficult. And they basically worked together with the governments and Wall Street and came up with this new 401k. And doing that basically offloaded that burden onto the individual to take care of their own investments. Now, that's been pushed on us ever since. And the narrative is to, go to college, get your degree, get a good paying job, work hard, and max out your 401k, every year and contribute to that consistently, your whole career. And then once you reach retirement age, you should have plenty of money and you can retire comfortably. And that's what's basically sold to us. Now, there are some benefits to the 401k, and we'll go over them here briefly. So one benefit they sell you on, which is the biggest one, I guess, is an employer match. So a lot of the times you put a certain amount of money in and your employer will match you up to a certain amount. Sometimes it's, 50%, 100%, 25%, it kind of depends on the company. So let's say you put in $500 a month, maybe they do $250 or $500, whatever it is, they will match up to a certain amount. And so that's one perk. Another benefit is that it is easy. It's automated. You can have it pulled out of your paycheck automatically and you don't have to think about it. You don't have to look at it. You can literally set it and forget about it forever if you want, basically, until you need to retire. And so it's managed for you, basically. So it's completely passive. So that's nice. The next one would be that it's pre-tax investment. So money is pulled from your paycheck before taxes and then put in this account where it grows. And that's basically what you're doing is deferring taxes and you pay taxes later instead of upfront. So that's sold to you as a benefit, but it's not really a benefit, which I'll get to here in a minute. So that said, the negatives. First one would be fees. And some of these might seem small, but they add up. So whether you know it or not, there's a certain amount of fees that are getting withdrawn from your accounts, consistently. And these are management fees. And depending on which fund you're in, it could be, kind of a large amount of fees or a small amount. So personally, when I was in my 401k, I decided to put it into an index fund, which had very, very low fees. And that worked out pretty well. But, if you have if you're in a fund with high fees, you could pay well over $100,000 in fees over your lifetime. So you're losing a lot of money there for sure. Number two here is a negative is withdrawal penalties. So let's say you need access to your money. You're going through an issue, you lost your job, you need to pay your mortgage, there's a medical issue, whatever it is, you need access to your money. If you pull that money out, you're going to pay huge penalties, you're going to pay taxes and fees, and they hammer you. So you lose control of, once you put it in that account, you're basically giving control to somebody else and you can't control that money anymore. And if you do, you get slapped on the wrist. So that's not great. Number three is that it's actually a pretty risky investment. So you are putting all your money into this one account and it's in the stock market. and it is subject to fluctuations in the market. Yes, when you get older, it kind of goes more towards bonds, but you're still in the market. And if you retire at the wrong time, you could lose a substantial amount of money in that account. And you have no other source of income. You don't have like consistent income from a job that you can depend on. You are spending the money in this one account. And when you're pulling money out of it, that's less money you have in there all the time. And if it's a low period in the market, that's less money that's going to grow into the future because you're pulling money out to cover your expenses. So that is a huge risk. Also, when you invest in the stock market, let's say you open a brokerage account and you purchase like Apple or Netflix or anything like that, you pay a lower amount in taxes. If you've kept the investment for over a year, you pay lower taxes, like, from 0 to 20% basically. That's what you're going to pay in taxes. Now with the 401k, when you pull money out, that is actually taxed as ordinary income, as if you had a job. And their reasoning for this is they say, oh, you're going to be in a lower tax bracket when you retire, so your taxes aren't going to be that high. I mean, I don't know about you, but I don't plan on being in a lower tax bracket. I'd like to make more money as I get older and build my investments over time. So they sell it as a positive, but I see it as a major negative because you're going to get hammered on taxes. The fifth one I have here is you can't use it until 59 and a half years old. So like I said, if you have an emergency and you need access to that money, you're going to pay huge taxes and penalties and fees to access that money. So I don't like the fact that you lose control of that money and you can't use it for other investments. Let's say you want to change it from a 401k into a different investment that you would prefer. Well, you can't do that unless you pay all the taxes and fees and penalties. So not great. So basically you are putting in 100% of the money. It's all your money. You're taking 100% of the risk and you're paying somebody else with the fees to manage it. And so it's like, it's not really a great deal in my opinion. So those are kind of the negatives that I see about it. If you want nothing to do with investing, you want to learn nothing about investing, you want to be completely hands-off, I would say yes, investing in a 401k would probably be a good idea because it's better than nothing. But if you want to do more, which this channel is devoted to, is, reaching financial freedom and having, plenty of money in retirement, you probably want to take it into your own hands a little bit more. And so personally, like I said, I stopped contributing to my 401k about 5 years ago. And instead of keeping it in my 401k, I saved it in a bank account and I purchased a rental property. And since then, it's been about 3.5 years since I bought that property. The appreciation of that property, appreciation alone, not even cash flow or tax write-offs or anything like that, it has grown in 3.5 years, 642%. Real quick to add a little bit of clarity into that, the property itself appreciated 76% in those 3.5 years. It's my initial investment, the down payment that I put down, that's what grew 642%. So just wanted to be a little bit clearer on that, which is massive. I don't think I could get that in the 401k, probably not. So that's what I'm kind of encouraging in this video, is that financial education can get you a lot further than just passively placing an account and letting, some fund manager manage your money in the 401k. So yeah, it's the best way to reach financial freedom a lot earlier and reduce risk. Because like I said, with a rental property, that can be consistent income every single month and you can count on that. Whereas with the 401k, it's like, I don't know, wherever the market's doing, I'm kind of just floating whatever the market's doing. So that's my take on the 401k. It's not my favorite. It's up to you as far as what you want to do. If you want to be more passive, 401k would be good. If you want to be more active and grow your wealth a little bit faster, then you might consider not doing it. So anyways, if you like this content, be sure to like and subscribe, and I'll see you in the next video.